Last week on Squawk on the Street, my partner, David Faber, told me categorically that Hain Celestial, the big natural and organic food maker, is not for sale, even though we've been hearing mutterings for a while that a large food conglomerate might be interested in buying them. We know things have been difficult for everyone, even remotely tied to the supermarket space, including Hain, which makes Celestial Seasonings, Earth's Best, Terra, Garden of Eden, Health Valley. You know these brands right here, the Greek God's Yogurt, a host of others. The industry's gotten very competitive, which has hurt pricing for everyone, including Hain's fancy natural organic products, even though it's clearly where the future is. And still, given the weakness in regular pantry foods, it makes sense that one of the companies might want to buy Hain. These guys have a different strategy, though. Last week, Hain came to an agreement with an outfit called Engage Capital, an activist firm that had been bugging them for board seats in order to push through a broad-based strategic overhaul of the business. Thanks to the deal, Engage is getting 6 board members. And the company created a working group, figure out how they can bring out some value. It's all pretty, frankly, opaque to me. This is why I want so much to hear it from the horse's mouth. With Irwin Simon, the chairman, president, and CEO of Hain Celestial. Hear more about how his company's doing, where it's headed, and what this is all about. Mr. Simon, welcome back to Mad Money. Good to see you, Irwin.
Hey, Jim, nice to see you,
All right,
too.
David Faber's right. The company's not for sale, right?
So let me come back and correct one thing. We got 6 new board members.
All right.
And 6 new board members with a lot of industry experience, Don, who is at Nutrisystems,
right?
ConAgra, Walmart, a lot of experience coming on the board here,
yes,
which is going to be very, very helpful to the company, very, very helpful for me from an international standpoint. So I look at it as 6 new independent board members for Hain Celestial shareholders.
Right, but again, to go back, these people didn't join to pressure you to sell.
No, listen.
Right?
Number one is there is as a friend of mine used to say, we got the secret sauce, and you know who that person is, okay? So there's a lot of great secret sauces. There's a lot of hidden jewels within Hain. And it's not about selling the company. It's building for shareholder value and continuously changing the way the world eats. Listen, we're a public company. Every public company's for sale,
right,
okay?
Right, by nature,
every public company. And listen, there's a lot of great things within Hain that most consumer packaged goods companies are missing. And listen, as I said to you the last time I was on this, I went through a hell of a year. The company went through a hell of a year, but we've come out in a good place.
Now, EBITDA declined, but you've got a plan to get it right back.
EBITDA declined, and some of that was currency, and some of that was fruit and vegetables in the UK, and some of that was our protein business. But there's a waterfall, and there's a great plan, to get that back into the 350 to 375 range. Listen, we're committed to take out $350 million out of the next 3 years. And commit to growth. There's not too many consumer packaged goods companies within the food and consumer packaged good area today that are growing and commit to growth.
Now, when I read through the most recent, which is the Barclays Global Consumer Staples, a very big conference, I kept thinking, okay, they're talking about slimming down. They're talking about cutting, to core brands. But then again, I didn't hear anything about any brands that are for sale. Irwin, it doesn't sound like it's a sum of the parts situation. It sounds like it's business as usual.
Listen, my father used to tell me, hey, you got to be doing something right when people are talking about you, okay?
That's true.
And it's good to be in the news.
Okay.
Again.
Well, it could be in the news in a way where people are wanting to clamor for your company.
Listen, we came through an accounting review.
Right.
We worked with Engage, and listen, Engage.
You like them?
Listen, hey, their shareholder owns 9.9%, okay? Why not? And again.
You like Icon? Yes and no, right? Icon bought a stake.
We're still friends today. Listen, they stepped up. They were very, very smart. They bought the stock in the 30s. They stepped up. Hey, you got to give them a lot of credit. They've brought some great ideas. I'm here to work.
So give me an example of some of the things they're doing.
Hey, they recommended some of the new board members, okay? So, hey, with that, we want what's best for shareholders and how we make Hain and continuously make Hain a great company. Jim, I have never seen so much change going on out there in the world.
Right.
I was in Europe last week and just, meeting with our teams over there and some of the things that are happening with retailers over there. Our e-commerce. Hey, Whole Foods. What's going on with Whole Foods and Amazon? We're seeing some of the greatest growth coming out of Whole Foods right now.
Are you closer to trying to figure it out? We had someone from Pennsylvania Real Estate Investment Trust. He's got a couple of Whole Foods. They're still not sure about what Whole Foods is going to look like under Amazon.
So I think there is a great plan in place. There was a lot of work being done at Whole Foods before Amazon, okay? And a lot of the pieces that Whole Foods were missing, whether e-commerce strategy, whether it's replenishment at store level, whether it's getting their marketing, getting data on their consumers, That's what Amazon is great at. And I think the combination of the both of them will be great for the industry. And listen, the Whole Foods Amazon deal woke up a lot of retailers, okay?
Right.
And that is what's great. The other thing is this here, we come back here and about, private label. Why is there so much talk about private label? Because the consumer packaged goods industry has done a terrible job on innovation of products.
Right.
Okay?
You said that, and yet when I looked at it, what I was thinking was, okay, there are some businesses that private label has done really well in. Maybe there's some things that you should get rid of. Because, look, not everything's growing equally.
Listen, I look at this like, a football team or a baseball team.
There's guys you have to cut.
There's guys you got to cut.
Next
and that's
man
okay.
up.
And
This is the next man up.
And listen, what is the next Greek yogurt? What is the next Celestial Seasonings out there? What is the next Terra Chips? Here is a new product in Better Bean. New technology. You don't want to be buying beans and soup in a can. We've come out with almond milk. Consumers today are not drinking milk. So
no, they're not. I know that from my end.
The big thing that Hain has to be on the front of innovation, new products, new packaging, sustainability, where we're getting our products from.
So the board members are endorsing your strategy is what you're telling me.
Board members are endorsing my strategy, but most important is consumers got to endorse my strategy because they're the one buying the products. They're the one driving the sales. And ultimately, you know what sales do? Drops to the bottom line. But, Jim, I think one of the big things that's changed, and I get asked a lot of times, Irwin, what's happening in consumption out there? There's so many companies today that are declining sales, okay? We've heard about this thing called zero-based budgeting, okay?
Kraft Times, yeah.
Let's cut. Let's not invest back into the business. Hain has invested $50 million this year to build consumer awareness, to drive household penetration on its brands. Millennials are our biggest consumer base, okay? Millennials buy brands, but you got to keep millennials happy.
All right.
You got to give them good pricing, good value. But most important is here, you look at this product, it's got 3 or 4 ingredients in it. It's not soda, Jim.
I know. All right, well, look, it sounds like you're staying the course and growing the business.
Like I say, when you're green, you're growing. When you're ripe, you're rot. So you got to remember, stay green.
It's good.
Like your tie.
You like that? I like that. That's a good theme you got going there. But that's Irwin Simon, Chairman, President, CEO of Hain Celestial. To me, it's staying the course with the fastest growing portion of an otherwise stagnant business. Mad Money's back in. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.